Major support for these programs is provided by Bank of America Merrill Lynch and Perfect Building Maintenance, New York Community Bank, Kilroy Architectural Windows, New York's Window Company, Greenberg Traurig, LLP, M&T Bank, Chase Commercial Term Lending. Additional support is provided by Briarwood Organization, Bruce Mosler, Capital One Bank, Cassidy Turley, C.B. Richard Ellis, Chelsea Lighting, Cushman and Wakefield, Dime Savings Bank of Williamsburg, Douglaston Development, DDG Partners, Hal Fettner, Durst Fettner Residential, Friedman LLP, Accountants and Advisors, Gemini Real Estate Advisors, LLC, Genova Burns and Gian Tomasi, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, James Orphanides, Centurion Holdings, Corman Communities, Madison Realty Capital, Margolin Weiner and Evans, LLP, Certified Public Accountants and Business Advisors, Massey Knackle Realty Services, Meridian Capital Group, Newmark Knight Frank, Sterling and Sterling, SJP Properties, Stonehenge Partners, the Wickoff Group, Urban American, and Ackman Ziff Real Estate, Ariel Property Advisors, Eastern Consolidated, Essex Capital Partners, Goldman Properties, Moynihan Group, Must Development, RAL Development Services, the Spandrel Group, LLC, Rosewood Realty Group, Terra CRG, Triangle Equities.
Tech industry, media is an industry, financial services industry. Everybody wants to rent space and be in New York City. I mean, this is the place. But, you know, Mr. Pessimist really doesn't know how the market is. So I brought together 4 people who really understand the office market today. And they're from all different sides of the coin. My guests today include Bill Elder, who is the Executive Vice President for Leasing for RXR Realty. Arthur J. Moranti II, who is the president of Avison & Young. Brian Waterman, who is the vice chairman at Newmark, Grubb, Knight Frank. And Richard Bernstein, who's the executive vice chairman at Cassidy Turley. So as I was saying, I have 3 people from the brokerage side, and I have one owner leasing operator. So as an owner, how do you see the office leasing market in New York City today?
You know, Michael, we actually see it as a fairly good market at this point. I think it's safe to say that we've definitely seen a bit of a pause from last year. This point last year, I'd say that the market was very strong, and we were looking for continued growth in the market. But despite the fact that I think it's paused a little bit in many sectors, except for Midtown South, which continues to be a very, very, I think, hot market is probably the best way to describe it. You know, we've seen a moderation of activity, especially at the very high end. But all things considered, we're still very happy with the overall market conditions that we see today.
We had the first quarter statistics were lower than they were last year, as we're saying over here. But in the month of April and the beginning of May, we've had some large transactions. You had Random House, you were involved with Morgan Stanley, you know, CBRE was involved with Viacom. But as we were saying prior to the show, these are transactions that they could have taken place if it closed. It could have been in January, it could have been February, because these are not short-term situations. They take years. I mean, how do you see the leasing market if we were in December of 2012, comparing 2012 to 2011, Richard?
Well, I think, first of all, the market is fundamentally very sound. The fact that 2008 is not yet a distant memory, and we never saw vacancies higher than 13%, and we have just about equilibrium today, and the market is healthy and prices are starting to recover without being led by the financial sector is a remarkable thing. So I think we're diversifying. We have social media and technology leading the way. And so I think long term, the market's very healthy, and I think we're poised for significant market growth in the next 2-3 years.
Let's bring that out. Yeah, I mean, you were involved with the Random House lease. Random House had been in that building for years, and they renewed and they took additional space, right?
No, they contracted.
Contracted.
Right.
So, but they could have, in the same way that Pearson is moving out of your building a little bit, they could have gone to the other side of the river, as some people call it, the sixth borough. Why do you think they stayed over there in that location?
Well, the intellectual capital is here. And I think we hear from most of our clients, New York is the place to be. We're not hearing, at least I'm not hearing as much about the conversations that lead to bifurcation of operations, that if you're efficient with space and you're strategic and you can reduce your occupancy, on a per person basis, but at the same time give the employees a good quality of life and a great environment, people are committed to Manhattan long term.
Now, I mean, with Morgan Stanley, they kept their commitment and stayed downtown. Do you see the financial industry continuing to stay downtown? I mean, we're going to have the Trade Center. I mean, I'm not certain who's moving in besides Condé Nast and the Ventra, the Chinese company, into one. But what do you see in the other?
There's definitely still growth in, believe it or not, in the financial sector. You have financial companies pulling people back into New York City and consolidating back into New York City because the differential between being out in New Jersey and being in New York City is the lowest point it's ever been if you're going to go downtown Manhattan. But I think that there are other tenants, like Richard said, that are really driving a large portion of the market. If you look at the Google effect, and we haven't talked about that since they bought their building on 111 8th Avenue, they said, we believe in the intellectual capital of New York. And we believe that we're going to be able to grow our business here, and find the intellectual capital here, and that's where the growth is going to be. You see leases done like JCPenney at 200 Lafayette Street, taking 120,000 feet. It's all positive signs for the market. You can go down the list of media and technology firms that are looking within the marketplace, 50 to 100,000 feet. They are the drivers of Midtown South. It's one of the reasons why it's the lowest vacancy rate of the entire country. And I don't think that there's a price that they wouldn't pay to be in that marketplace. And that's one of the reasons why you're seeing the Midtown South rents continue to climb. Bill and I talked about this.
But let's look at the neighborhoods, over the years, before you poured the Starrett Lehigh building, I remember very few people were thinking to go over to 11th Avenue over there. It's a square block, and you can get lost on, there wasn't much over there. And I mean, it's a different neighborhood. And if you look at the changes in the city, I mean, you've been involved with lots of the owner-developers, Arthur. Do you see the Hudson Yards being a great potential market?
Absolutely. To be healthy, a market has to have space. So I don't consider a market with a 4 or 5 vacancy, percentage to be healthy. You have to have space where businesses can expand and grow. And again, what Richard said, when you consider that this market at large is at equilibrium, considering the economic headwinds we're dealing with and the political uncertainty that we're dealing with our debt crisis, which we're going to revisit in the summer, and the coming presidential election, and what's happened in Europe, and then next year the Bush tax cuts being revisited. It's extraordinary that this market, we've slowed down a little from a record pace of last year, but that's because the uncertainty is unbelievable.
So who do you see, which type, you have the Hudson Yards, you have the related, program with their Canadian partner, Oxford. You have Brookfield, another Canadian company. Oh, and you're a Canadian company. No, on Brookfield space over there. Who do you think, besides the story of Coach, is going to go out to the Hudson Yards?
I think it's a multitude of tenants. I think that the area is, the up-and-coming place in New York City. I really believe that. And despite the lack of, easy transportation, which is actually going to be solved a little later in 13 with the addition of the 7 line coming over to the 33rd Street and 11th Avenue corner. That's really been the main, I think, detractor of that whole area. But when you ask why people go to Sterrett or why people go to Hudson Yards or the far west side, it's an incredible lifestyle over there. You've got great housing, you've got vibrancy, you've got all the kids want to be there. It is the creative hub of New York. And, I think everything's starting to come west now. When you look at, Brian mentioned the Google factor, that area is very mature now in terms of the hottest restaurants in New York City are in that area. Those will all come west eventually and give people who sit in those buildings really great.
So what happens to somebody who has an office on 3rd Avenue? Well, I mean, 3rd Avenue is
one of the weakest markets right now. I mean, 3rd Avenue has a lot of vacancy, but when you talk about the west side, there are, the Time Warners that potentially will be out there. The Credit Suisse may be out there on the market.
CBS,
News Corp.
CBS, News Corp. There are a bunch of tenants that are kicking around that could potentially take up the vacancy in both the West Yard sites or downtown Manhattan. Those are definite tenants that will be in play.
And what type of rents do you think there'll be in the Hudson Yards?
I think, depending upon which project, but I think they're going to compete with, new product downtown, maybe slightly less. But, I think that if you have product today that has good light and air and a lot of cube and good amenities around, the market is more agnostic to location to some extent than it ever has been.
You brought an interesting concept. You said Random House retracted. They took less space. And something that I've been bringing out on a lot of my shows and my panels is that a lot of people becoming more efficient, especially in the tech industry.
That's right.
Okay, they're taking smaller space. I remember when law firms used to have a partner's office, and there was one assistant for 3 people. Now it's one assistant for 5 people. Now we have cloud computing. We don't have law libraries. So there's a difference. So, isn't there more efficiency in space?
Oh, there's more efficiency. The new developments, especially Manhattan West and Hudson Yards, are going to offer tremendous opportunities for reduced space usage, and they're going to take care of the whole ecological concerns, the green concerns of the new tenants.
So you'll be able to bring your bike over there because, in order to be green, you have to have a
Michael,
bike.
you don't have to bring your bike. They're adjacent to Penn Station, the largest transportation hub in the world. I think it's in excess of 400,000 people every month are going in and out of that transportation center. Manhattan West is 1 block away. And your rents, the first tenant will get a bargain, just the way the first tenants in always get a bargain. And you could do a deal in the mid-70s, probably, the first tenants in those buildings.
But that's for a certain class of tenant. If you look at Bill's building over on 26th Street, they've already densified, right? And so they're looking at quality of life issues. You look at, Related's buy of 511 West 25th Street. You look at Larry Gluck's buy of 161 Avenue of the Americas, 233 Spring. These type of tenants want quality of life, and they want a certain type of lifestyle.
Let's be real. Look, 161 Spring, that building for years was nothing. I remember the neighborhood. Now, I hadn't been down to Hudson Square for a number of years, and then when 1010 Winds moved to 345 Hudson Street, I remember these printing. This was a printing business. And you go into this building, and the fan is there, Winds is there, CBS Radio, all
They
this
want to live that life.
Okay, and it's a great thing. You have Jacques Tarras, you have everything else,
It's cool.
It's cool,
Right.
Bill's smiling because that's the sell over.
That's what people want.
That's what
they
people
want.
want.
Exactly.
And I will tell you, it's hot. It's become, I think Hudson Yards doesn't have, not Hudson Yards, downtown where I'm talking, Hudson Square, doesn't have the full 24/7 because they don't have enough. They don't have enough
retail.
Residential and retail.
Right.
But that neighborhood is growing
it is.
like leap and bound.
It's a tremendous marketplace.
And when you really analyze it, it's employers have to give their workforce the kind of creative environment and the kind of infrastructure that their people want to work in.
For a certain type of tenant.
For a certain type of tenant,
Right.
right. And so these buildings that we're talking about cater to those types of experience. So the employees demand it, and so they're getting what they want. And so, You know, when you're talking about the engineers that Facebook is out hiring right now, I think 2,000 of which are going to be in New York. You think about all these companies and all the workforce that used to be in California who now want to be in New York. This is where they want to be. They don't want to be north of 42nd Street in a
everybody wanted to talk 42nd and 60th.
No, I just want to, and yeah, you're right about that specific kind of tenant.
Right, about
You're
that.
dead on.
Right.
It's cool. However, I'm reminded of the CEO of Time Warner, who's embarrassed by the elegance of his office right now.
Right.
Beautiful office, Time Warner Center, overlooking Central Park. It embarrasses him. So I think it may even be more than just the media tech companies and the young generation, the creative employees that think that space is cool. I think the efficiency, the open space is more of a trend of our time. That's going to probably reach into the financial services industry.
It is. I mean,
and even the law firms.
You know, we just finished a consolidation for Coty, world's largest fragrance company, Empire State Building. They wanted to make a statement: quality of life, light and air, open landscape, one building solution. But they wanted value.
You know,
they wanted value.
Certification and all the other things.
They wanted value. And let's be realistic. Who would think that, you know, fine, you know, the observation that's great. Who would think that people would move back into the Empire State Building? I mean, the Malkins really did a great job.
Unbelievable.
You know, and people want to be in that. And
absolutely.
Coty is a major company to make a commitment to the Empire State Building, but part of what is what Arthur was saying about transportation before. You know, you got the Penn Station, you got Port Authority, you're not far from Grand Central, so you have all of the accessibility over there on the situation. But let's leave Manhattan for a second. You know, the city has 5 boroughs, okay? There's nothing in Staten Island, unfortunately, you know, except for where Arthur living, but no, but I'm not, no, office is not there. What about Brooklyn and Queens today? I mean, you know, there's the talk that the Barclays Center, they're going to build office, you know, in Atlantic Yards. I think downtown Brooklyn right now, the office market is still a little weak, and you can still get a good deal over there. Queens, you know, JetBlue moved from Josh's building to the Brewster building because MetLife didn't want to be in Long Island City.
There's a hole in that building now, for sure.
Right. You know, but you know the situation over there. How do you? But the people don't realize that we were discussing before. There are the REIT benefits, you know, for a for-profit company, which can reduce the rents going down over there. But I think there was the major commitment with Gotham Center, you know, when they moved down there, you know, and there are other things. Do you see tenants saying, I want, you know, and I also think the tech move recently, you know, the New York City Polytech is, you know, NYU Poly is going to 370 Adams Street.
Right.
Do you see companies who have been in Manhattan looking for Brooklyn and Queens today?
I don't. I think we're going to need some additional price increase in Manhattan. You know, while the market is very healthy and we're at equilibrium, the rest of the story, I think, which will be completed in the next couple of years, will be the price recovery to pre-2008 levels. And at that time, depending upon whose statistic you look at, Class A rents in Midtown average were $100 a foot. And today they're, what, 75? So I think if you see that that increase, you know, over the next couple of years, I think that's when the activity will pick up in the boroughs.
We are seeing some activity in the outer boroughs, but it's not of the type of tenants that benefit by the benefits that they can get from the city or the
So
state.
they're nonprofits.
They're not for profits.
So they're not getting the cap benefits.
They're not.
Right.
Yes,
They're
Arthur?
not.
No, I agree absolutely with what the guys just said. 2 exceptions. You are seeing the city of New York, hospitals, and other special uses emerging as large users in Brooklyn. I can't speak for Queens. For one reason, you've had an emerging middle class there.
Right.
With the new residential construction, people need services.
No,
they need health care.
You're 100%. I ran into Tom on the other night. I was speaking in Flushing, and he's with Mount Sinai. He said, we just signed a lease for 75,000 square feet in downtown Brooklyn.
Yep.
I'm not
Just lost that deal.
You know, but he, you know, he brought it up, and he said, I said, you're paying $18 a foot? He said, how do you know? I said, I figured it out. But no, it was just, but it was an interesting thing, and you're 100% right. And in Queens, I was in Flushing. You know, with the large population over there, you need more, you know, the medical office or the specialty office could go into certain of these markets.
But you know, in addition to that, I think you also need, New York needs to cater to lots of different businesses and lots of different people. So I think you need a lot of options to satisfy that. So, you know, as the market continues to grow, as Richard said, you're going to push people downtown into some of the B and C product and ultimately to some of the outer boroughs. So I think having an $18 to $25 option in Brooklyn or Queens is a good thing for the city in general, so that we can satisfy all those businesses.
You talked about where's the market going. I think you got to talk about what are the risks associated with some of the markets, and Arthur was going there, which is the political risk. You know, we're looking at presidential election in 2013. We're looking at, in 2012, mayoral election in 2013. Those are major issues that
We
can
also
have
have
an impact.
tax changes, you know,
That's right.
taking effect.
If we need a mayor that's going to be pro-business, you know, strong on the unions. You know, we need somebody that's going to really help us, you know, with, you know, quality of life issues, and that's the type of mayor we're going to need, and that will absolutely have an impact on the overall viability of the marketplace.
You also have to remember our friend, Mr. Governor Christie, over there in New Jersey, has authored certain urban tax credits, which are so valuable, you know, in markets over there that people, you know, Jersey City, Hoboken, and other markets in Newark, to get these companies to go over.
And get a building for nothing.
Well, I think Cuomo's been supportive of business to a certain extent.
I'm not disagreeing, but what I'm saying is those incentives are really strong incentives, and if you're a for-profit company and you go there, you're not paying rent. It's just.
But I'm not sure you've seen any kind of mass exodus out of New York to grab those benefits.
Right, even with those benefits, right.
I think people still want to, you know, retain their businesses here for all the reasons that we just talked about.
Right.
You know, Brian said something I think that's very important, and when you really look at the guidance through, you know, the current mayor and, you know, prior mayor, in terms of beneficial infrastructure in New York City and making the quality of life and the low crime rate, you know, those are all critical pieces to the success story of New York City. People want to be here, and it's not just because we have great real estate, it's a great quality of life, and I think that surrounds all those things that I just.
We're going to lose jobs, we're going to gain jobs. It's the ebb and flow of the market.
Let's look at two other markets in Manhattan that we really haven't discussed. You know, a number of years ago, I remember Cogswell had bought some buildings, Bruce Ratner had built some buildings in Harlem. Where do you see companies, and also Vornado had bought the site on 125th Street and Park Avenue. Do you see companies going over there, because there are also REIT benefits in that market? That's one question. And then the second question relates to the absorption in Lower Manhattan, because you're going to have, you know, One World, then you're going to have Larry's building, you're going to have some other situations.
I think there's no availability up in Harlem, so it's hard to judge that. You know, if you have a tenant that wants to go up into that area, it's going to be a new development if there are any, you know, of any size. So I don't think that there's a lot of people kicking the tires on the Harlem sites.
I agree, and I think we got to continue to put this into context. We've got the weakest economic recovery right now, I think, in the nation's history following a recession. And New York is the engine that has always driven the outer boroughs in those other markets, including New Jersey. And we were in the midst last year of a pretty dramatic recovery. 100,000 jobs, leading the nation by far as a city. Now we're kind of flat again in that regard. And I think the condition of a market is remarkable considering the headwinds we're up against. And I don't think we're going to see growth in Harlem, in New Jersey, in Brooklyn and Queens, unless the economic engine in Manhattan gets to recover and gets a little momentum.
And what about Lower Manhattan, which is another question?
I think Lower Manhattan is going to be a tremendous lower cost alternative for major businesses like Morgan Stanley. Financial services that are retrenching.
There's a dynamic that's changed from 10 years ago to today, which is the transportation hubs. I mean, they're major drivers. I think you're going to see.
And the 24/7 environment now, which is a major advantage.
You're going to be changing dynamics. So, I mean, there are low-cost alternatives down in Lower Manhattan, but there are also high-cost alternatives. You need to separate those out and really say what's going to happen with the high-class alternatives, what's going to happen with the low-cost alternatives. And I think there will be a depth to the marketplace on the low-cost alternatives. The high-cost alternatives, you're going to have to be a driver of a big tenant to really get a lot of that vacancy sucked up, or do it like they did 7 World Trade, which is a couple 100,000 feet at a time, and just bring down the vacancy rate as you go. You know, Condé Nast has changed the whole dynamic of the lower Manhattan district. You have a lot of media companies that now look at that and say, it's acceptable to be there. We want to look at it. We want to kick the tires. The question is, and Richard represents a lot of media tenants, can they pay that rent? You know?
And what I find remarkable, you can really feel the energy downtown, and it's really, at ground zero, it's really not open yet for business. But can you imagine when Condé moves in and they finish the site and Calatrava opens up? I mean, it's going to be an incredible destination in New York City with
Just
light
seeing the
and air.
skeleton now
It's
is
remarkable.
exciting.
When
Not to
you go
mention
up
the fact Condé's got a great vibe as a tenant, right?
Absolutely.
The people that work there, it's just all good.
So who takes over Condé space?
It's a good question. It's in a great building.
I mean, it's a great building, great location.
There's a
great
It's, you know,
views.
it's great views, you know.
Setback off of Times Square, so
And you're probably going to get a good incentive because the Port Authority gave an opportunity. They're guaranteeing a portion of the rent, right? So, you know, it's a...
I'd be surprised if Bank of America didn't have a play on something that happens in that particular building, considering
yeah,
their
definitely
neighboring
logical.
building and their need for space, you know, most of the time.
Now, we have a couple of other office buildings coming up online. You have 55th Street, Boston Properties. You have another tower, on the Milliken site.
40th Street.
Hines.
40th Street,
Right.
the Hines. And then you have the other one, which may happen on like 55th Street, 53rd Street, near the museum. The
Oh, that's a hotel.
No, there was also an office building at one time planned next to the museum.
Oh, that's residential now. That's actually adjacent to 1330.
But then you have 425 L&L's development, 425 Park,
Yeah.
Right?
Right.
Yeah.
Green has an
75 Rock,
assemblage.
which is going to be
SL Green on
renovated and
Madison Avenue.
redone. So
Right.
There was
Madison and
some-
42nd Street,
Right.
which is 1 million square feet.
Which one?
SL Green, right at Grand Central there.
and you got the Diamond Building, which is now in the market.
So what do you know, that's an interesting discussion. Do you think the Diamond Building is going to get rents over $100 a foot?
I don't think they'll make deals if they don't.
Really?
Because they got the base essentially committed to by the diamond industry, and I think he's going to hold out
Yeah.
till he gets his numbers.
So, you know, I hope that all of you will come back later on the year. We'll see how the...
Only if we're right in what we said to you.
No, you know, we put the people, good and bad, right, and everything. I'm happy to have Bill Elder, Arthur Moranti, Brian Waterman, and Richard Bernstein, no question. And I'll see everyone next week. Thank you.